Is the mic on? There we go. If you'd like to take to your seats, we're going to start the panel discussion. As I said, we'll be looking at the investment that's going in to the digital infrastructure industry, whether that's data center, carrier, or fiber. So we've got a cracking lineup here. And the moderator for the session, Dedi Iskandar, I'd like to welcome to the stage and hand over to Dedi to introduce everyone.
Good morning, everyone. Thank you so much for joining us for this panel. It's a very exciting panel. I see a lot of my friends and colleagues over here and some of the new faces. So just to introduce myself, my name is Dedi Iskandar. I'm the head of the CBRE's Data Center Solutions Asia Pacifics. And today I'll be moderating these panels about the digital infrastructures investments in Asia Pacifics. So let me just introduce the panelists, please.
So good morning, everyone. My name is Obaid Rahman. I'm the head of wholesale for Axiata Group. So as Dedi mentioned, he's seeing some new faces. So probably I'm one of the new faces in the region, but not a new face in the industry. Been in there for about 25 years, but different continents. But obviously I know a couple of people in here. But going back to Axiata, quickly, we operate in 6 markets as MNOs, but we are big into digital infrastructure, digital businesses, in mobile money, in tower cos. So we span, our business spans around 13 markets across APAC, with around 50 million subscribers in an addressable population of 500 million. So that would be my introduction. Thank you.
Thank you.
Hi, I'm Eugene from CapitaLand Investments. I head up the data center business group in CapitaLand. For some of you, you may not be aware that CapitaLand has a medium-sized and growing data center platform business. Maybe I'll just throw up some numbers. Today, we have about 500 megawatts of capacity across 8 countries and 24 projects. Our role is as an investor, developer, and in selective cases, an operator as well, depending on the market context. So very pleased to be at this platform. Look forward to the questions here. Thank you.
Thanks, Eugene. For those of you who don't know me or who I work for, my name is David Massey. I work for a company called ESR. If you're not familiar with ESR, ESR is one of the largest real estate asset managers and developers in Asia. We've got about $150 billion worth of property around the region in logistics, new economy sites. I'm fortunate enough to be running the data center business at ESR. We raised a fund this year, which we're using to invest and build data centers on behalf of other operators and hyperscalers around the region. So helping, overseas operators and overseas service providers come into the region and operate in countries where they're not familiar and not aware of the regulations. So that's kind of where I'll be coming from when we talk later. Thanks. Chris.
Hi, I'm Chris Street. Lead the data center practice at JLL, which is a real estate consultancy firm. And so we look at data centers across the entire continuum, whether it's working with investors to place their investments and help them enter markets here in APAC, or through the design, build, operate phase of the facilities. We also provide those services. And once they get built, then we help the operators fill them. So full life cycle kind of approach and across all of APAC. And so it's great to be here, great to see this panel kind of come together about the evolution here at Capacity on digital infrastructure. It's really, really important subject.
Thank you, Chris. So as an introduction, right, digital infrastructures investments in Asia Pacific has been gaining at a rapid pace in 2022. So according to the Boston Consulting Group's latest reports, on infrastructures invest strategies 2022, the global assets under management for the digital infrastructures will reach the records of US $950 billion worldwide. Right. And this is only this year alone. So as the number of the infrastructure investors and the infrastructure options increase, which is private fiber, data center, tower, or the submarines. The strategic questions grows in the importance of these digital infrastructures. So questions such as how should investors select their exposures to a different segment of the infrastructure universe, because there are so many options that the investors are able to choose now. What are the risks and the returns can they expect? And what's the strategic choice that they make to develop their portfolios, right? In order to that, we had set up a couple of questions to these panelists. The first question, which is what most of everybody's asking for. Where in Asia do you think is the focus as the investment hotspot for your organizations? And how the investment actually materialize? Is it a joint ventures, or is it a merger acquisitions, or is it a greenfield assets, or are you buying 100% completed assets? And what do you think the prospect growth for these locations? So maybe let me start with Diamir. Yeah.
I'm just not sure which question to answer there, Deddy.
No problem.
There were about 100.
That wasn't pre-planned, right?
No. Let me start.
I would say it's the first one, the hotspot.
Can I start with the bits I liked in the question and ignore the ones I didn't?
Sure.
Okay, cool.
Go ahead.
So the ones I liked are where would you choose to invest? And that's going to come down to individual investors. You know, I think some investors have appetites for different markets. So we have investors, for example, who are very excited about Southeast Asia but have no interest at all in investing in China and Japan, whereas we have others who will only invest in Japan and have no interest in India and China, because their level of risk or their exposure already in those markets might be too large, or they have other investments already in them. So there is no massive answer. I think if you look at the growth in infrastructure around the region, you know, Japan continues to be a high growth market from a data center perspective, and from just a digital infrastructure in general. Korea continues to outperform. I mean, and if you have an appetite for it, clearly mainland China does. But the reality is that most investors who invest in mainland China, unless they have Chinese money, are concerned about how they can get the money out of China. So I think, you know, in North Asia, that would be where most people are looking. Southeast Asia, you've seen tons of growth in Singapore, which has obviously stalled a little bit lately, but you know, you're seeing increasing growth in Malaysia, Thailand, Vietnam, Indonesia, and that's just going to continue. Equally as much India. I mean, how many more data center projects, infrastructure projects can India announce? There's a lot of growth in India, but if you compare the data center or just digital infrastructure penetration in India to the United States, for example, there's a massive room for investment. And it's really just a question of catching up with the rest of the world. So I think anywhere and any asset class, but depending on your level of risk and where your money comes from.
Understand. Mr. Obaid?
I didn't like any of the other questions, so that was the only one I asked.
Yeah, no problem.
So I think Diamond has already listed all the countries in the region. You know, I'm not left with any. But I'll give you a slightly different perspective. You know, obviously Diamond started off from the developed markets and moved towards the developing market. But given our affinity, given our exposure to developing markets more, I can give you a slightly different view on that. So first of all, I agree with what Diamond is saying. But I think there are a couple of things, macro indicators that you have to look into. You know, you basically quoted BCG, but even if you look at telegeography data, intra-Asia traffic is increasing, you know, more than any other continent at this point in time. And I think the underlying reason is that the digital literacy, digital penetration is increasing in all these markets through private initiatives or public initiatives, you know, the digital nation agenda that most of the countries have. So it's basically increasing that whole digital uptake. That is increasing the middle class to grow as well, meaning, you know, there'll be more consumption. And again, you know, I heard earlier one of the panelists talking about consumer versus enterprise. I think, you know, it's going to be a mix of both. So if you take that into the context of the markets where we operate, in the developing ones, Indonesia, needless to say, I think, you know, everyone is going to note that, you know, there's a lot of opportunity there. But again, there's what you call a shift happening as well in terms of, the Singapore moratorium that they're basically, banking on the geopolitical elements within South China Sea is helping them out as well. So, it's growing, but from our perspective, we see that, at this point in time, there is an oversupply, and hence, from a capital or funding perspective, we've gone in a partnership in that market. I think, kind of a JV model works best for that. If you move to Malaysia, I think, again, it's relatively smaller market, but a lot needs to be done over there. And again, talking about where the capital is going to come in from, probably there's a lot of foreign capital flowing in, especially, from the hyperscalers and whatnot. Now, if you move a little bit westward, into the developing markets where, the access of capital is not there locally, let's talk about Sri Lanka. It sits on the maritime route, strategically located, when it comes to the geographical location. But given, the whole economic health of that country, there are issues at this point in time in terms of raising fund locally and then, even getting it from the outside. But, if you look at certain nuances there, the whole market is changing. At one point in time, the local DCs, the subsea cable consortiums or investors were struggling at one point in time, but now tables have turned, just purely because of the economic situation. The local enterprise customers don't want to spend US dollars, so everything has to be basically done in Sri Lankan rupees. That means, the relevance of hyperscalers is less compared to the local ones. So, there's a lot of business uptake. Where is the capital going to come from? Not sure, but, there's growth over there. Moving a little bit further up into Bay of Bengal, Bangladesh, it's a largely untapped market at this point in time, from enterprise, even from consumer. Again, if you look at a cost per unit for data provisioning, that's relatively high. And again, that was the reason I was asking this question earlier about regulation, policy, advocacy, lobbying, because the whole market is layered at this point in time. Not only that, a couple of other markets I can quote as well. But that's a classic example of a place where delayering is required for investors to gain trust and confidence in terms of investing in digital infrastructure, right? So, big opportunity over there. If you move to Nepal, again, the geopolitical elements come into play. You've got a big giant in north, a big giant in south, probably, not in good terms at this point in time. Big opportunity. But again, then other things like the geographical location comes into play. Like I was there a couple of weeks back. I do see an opportunity, not locally, but becoming a kind of a transit hub. But then that whole blob of land is landlocked, but it sits on a tectonic plate at this point in time. So would anyone basically invest in digital infrastructure there? Not sure unless you have a captive audience. So in a nutshell, I'm sorry, I've taken a little bit more time, but I think there are nuances in each market of, what kind of capital is going to come in, what kind of digital infrastructure is going to be basically deployed, and what kind of consumer is going to be served over there.
Thank you so much, Obey. So Chris, from the JLL perspective, where do you hear your customers is asking you for? So, and what was their, I would say, is the wish list in this case?
Their wish list?
Wish list.
A clear path to exit. I mean, that's always the goal, right? And so, to echo a lot of what was said here is like, there's every market in Asia has opportunity. It's really about how the underlying investor's thesis is whether they've got the risk or the appetite to take on the risk of that. Like I've seen projects in high-risk markets that actually had customer commit that if you put that, 500 kilometers to the west, I would have had a line out the door, but they didn't, because it's a high-risk market, the investor pool that was interested in that opportunity was quite small, even though it's a project that's going to be built, got government support, and got a customer, right? And so put that in any other market that's mid-development or developed, it has a line out the door to get it. And so what's happening, though, is that nuance, right, is that digital transformation that was mentioned in the panel before, across to APAC, right? That's driving all this cloud investment, which is driving the entire digital infrastructure ecosystem. Data centers is a big portion of that, obviously, what we focus on. And that ability to the investors to kind of match that and be able to execute. They're using all those tools that you fired off at the beginning, right? Is that the flexibility to enter these markets, whether it's through a JV, whether it's through a greenfield, whether it's brownfield transformation, whether it's taking a secondary kind of financial interest. Those investors that are able to have that flexibility and look at deals and deal flows that come in front of them and maneuver are the ones that are executing and have that path to that successful exit, which is what we're seeing, right? And it's really, in Asia, compared to maybe some of the other regions, whether it's the Americas, like North America example, or maybe even Western Europe, you've got to have that flexibility as an investor to really to look at the deal from all angles and look at different partners, because these markets, it requires that level of agility. It's much harder, higher bar.
Yes. Eugene's, on CapitaLand sides, I mean, it's been very focused on Singapore and some of the tier one markets. So what do you see now in Asia in general? Is there any kind of investments hotspots that, from your perspective, from your organization perspective, that you're looking at?
For us, we see the big markets: China, India, Southeast Asia. Our DNA as a company is still Singapore, China, India, a little bit of Vietnam. So this kind of aligns with where we see the investor interest going. In fact, I would expound on that and say there are two types of investors. There are your infrastructure investors. They are more ready to go into digital infrastructure. And then there's your classic real estate investors who may just want to stay on the land, the core and shell. They may not want to touch the M&E of the data center. So I think recognizing that differences are important in the conversations. In terms of the type of investor, what we also see is the institutional capital being more sophisticated. They're asking all the tough questions, the right questions, if you ask me, about investment risk. They themselves also start to appreciate that all these synergies between the different types of digital infrastructure, whether it's fiber, subsea, towers, data centers. For CapitaLand, because we start as a real estate investor and developer. So for us, data centers is more natural. But the broader digital infrastructure space is something we do keep a lookout on. And in terms of the different market entry points, whether it's a JV, greenfield, brownfield, I think it's a case-by-case basis. We recognize that in certain markets, the regulations may require you to joint venture.
Thank you, Eugene. And coming to the next question, which is actually related to the real estate itself. So how do you see the role of the real estate players in supporting the digital infrastructure investments in Asia? I mean, Eugene, you probably can start first, because from the real estate player.
I'm sure that Amit's also equally qualified to answer that. For at least for data centers, because these are facilities that require land, power, usually those real estate developers, investors with boots on the ground, people who can find opportunities, talk to the local authorities, do all your DD, there's that competitive advantage for us. So that's where we see the real estate industry being part of that larger ecosystem to source for sites. Then downstream from that, that's where some of the operators come in and say, hey, that's where they bring customers, they bring the M&E expertise, so on and so forth. So everybody has a part to play in this.
Thank you. Taimir?
Yeah, look, I think, it's a wonderful question. It's like, what do you think of the real estate industry and what can they do? I'm not sure what the real estate industry really is.
No,
but
I mean, I would say that
if you mean brokers and...
Yes.
Yes, okay.
Yes.
So him. and you. So I think to elaborate on Eugene's point, as a real estate investor or as a logistics park developer or office building and commercial developer, ESR is fortunate enough that we have a healthy balance sheet which we're able to land bank property on. And part of the challenge today is getting property, getting power on it, getting permits to knock down or build or do whatever you need to do. And for that, you need in-country support. We're very fortunate, much like Capital Land and others, that in the countries we operate in, which is basically Asia-Pacific, we have people on the ground who do that every day. And that is the value add that operators or real estate operators, if you like ourselves, can bring. We have no wish to ever be a data center operator. We're just a real estate developer. And it happens that one of the asset classes now, which we really like, is data centers. I do think there's an incredible value that brokers, JLLs, CBREs of this world, bring to the party, which is not only helping people source land, but also, as Chris will elaborate on, I'm sure, about how they can then help operate the facility and manage the facility from soup to nuts as well. But that still involves someone building it and someone moving forward. So it's a complex ecosystem around real estate, as I think everyone knows. Having land and permitting and power and people on the ground and having done it before makes the second time a lot easier. And I think that's what a lot of us bring to the party.
Thank you.
Go on.
Chris?
Yeah. So
As a broker, what do you see is the role of the real estate player?
I don't know. I'm not a broker, but
So-
but I mean, at the end of the day, right? I mean, what does any advisory firm bring, right? They bring resources, they bring knowledge, which is valued to their client, right? And without that, you don't have much. And so, at the end of the day, like this is a data center is more and more a true real estate game, but it's you need the on the ground support. I mean, I've talked to operators that are, two guys in a PowerPoint or two women in a PowerPoint, but that want to come out and they're like, well, can I just outsource my site selection? And my advice to them is always, I would love to as a firm, and maybe my JLL colleagues will cringe when I say this, but that is probably one of the worst decisions you can make as a new operator, because it's a strategic aspect of your business. If you don't have that in-house, we can supplement and we can advise and we support, right? And we'll do that. And but it's so strategic to your day-to-day operations. Like if you're not doing it yourself or you don't have that skill, like what are you doing in this business? And but yeah, I mean, you need the on-ground support. You need to be able to navigate through all the permitting issues. And one of the complexities that's coming up that I've seen in the last probably 10 years that I would have never, looking back 10, 15 years ago in this business, like the push sometimes against new developments, even in established data center markets or sub-markets, right? And that ability to navigate through the complexity of the different stakeholders, it's really front and center, and it adds a lot more complexity to what we do day in, day out in terms of projects, getting them across the line and getting them built. And that's what is one of the elements that's really changed, and that's where the on-the-ground support, whether it's your design engineering firm or whether it's your folks working with the government, the local regulators and permitting offices, or whether it's working with the communities in which we operate, we have to be cognizant of that as an industry. So,
Obey, as the operator itself, right? What do you see the values of the real estate partners of yours into this?
So firstly, I think most of the points I wanted to make have already been alluded to, but, taking Eugene's point of everyone has a role to play in there, right? The Army's point of, healthy balance sheet. I think, from an M&O standpoint, we have one thing on our balance sheet, which is the real estate assets sitting with us, right? And then again, what Chris mentioned about on-ground support.
Yes.
So if you see all these things, this is something that is already present with a mobile network operator or even a fixed network operator.
Yep.
So I think, if you look at digital infrastructure, obviously there are different pieces of the puzzle. DC obviously needs bigger land mass, but then you have edge computing, inching in.
There's a tower
You've got
as well.
backhaul, you've got fiber, you've got local access, submarine. I think one thing that we kind of miss out when we talk about real estate is all the real estate that network operators already have, right?
Yes.
Which can be repurposed, reused, recycled for things like, that's going to come in. For example, one of my colleagues was mentioning the MSCs that we have, they are decentralized and actually optimized from a demographic and a geographic perspective. That whole reallocation and reutilization can happen. So the point I want to basically bring out here is that, yes, everyone has a role to play. But rather than just going out and, building up stuff, there are certain things that can be reutilized. And that's where MNO comes in.
Okay. Thank you.
Can I comment here?
Sure.
I know two markets. They're actually real estate players with the big banks of land they got it. They're entering into data center space. Earlier, data center used to be a telco play. But however, if you see Adani's, with now probably the number 2 and number 3 richest person of the world, he has, to that extent, he is developing such a data center. He is bringing even cables into that city, Visakhapatnam, East Coast. So far, it is not actually a big name in the telco or network domain. And if you see in Sri Lanka, John Keels is one of the very old conglomerate there. So they got used bank of land, which they are converted already into a data center. So real estate players are actually heavily coming in in data center space, especially in the Asian region, actually, as far as I know. Thanks.
Thank you.
Can I just come back to you on that a little bit? While there are lots of real estate players that have land banks, and we are lucky enough to be one of them, not all land is suitable for data centers. And I think that's the key tweak to that argument, because what makes a good logistics piece of land is not necessarily the same piece of land for an office building or for a data center. And with data centers, as you know, you need lots of power. You generally need lots of water. You need lots of fiber. None of those are required for an office building. And so the challenge is about not only finding the land, but then finding the infrastructure to support it, which the traditional real estate players don't necessarily have that ability as a core competency. So you've got some little tweaks to it.
Yeah, I mean, the reality is that data centers as an asset class within real estate investors is new, right? And more often than not, it's an educational journey in working with them, because first of all, if you think of it in the scope of real estate, just investing overall, right? It's always in the alternatives, which is the smallest portion of most funds, unless they're focused on that space. And then within that, it's a portion of that. And so in every market across Asia right now, there's developers, classic kind of real estate investors, developers that are looking at it because they have the land banks, right? And they hear about it, and they're on that beginning. And every week we talk with folks that are just at the beginning of that, and talking about how it interplays with all the rest of the telecommunications and cloud computing infrastructure out there, and how it can complement what they do in the rest of their real estate investment portfolios, because it is so unique. And they always think that, I've got industrial land, so I can make a data center. And 9 times out of 10, 8 times out of 10, it's dead on arrival, because you take a look at it and like, well, it's next to that body of water, or, you know, it's next to some depot, or, you know, there's no power to it. Like, there's just things that automatically from a site selection will get dismissed, you know, first round.
Thank you. Let's move on to the, some of the most, I would say, sensitive topics. And I would like to start first with Obaid. In Axiata, as an operator itself, Axiata invests, I would say, huge investments in digital infrastructures, the fibers, the towers. What do you see in terms of the risks and returns in these digital infrastructure investments that Axiata has made? What are you seeing so far?
I think it goes back to what I was alluding earlier in terms of, you know, each market has its own nuances, differences, challenges, opportunities. So I'm not going to go one by one, but again, you know, in general, if you look at our digital infrastructure as an MNO, and again, no disrespect to, you know, all the panelists here, we haven't been able to basically get a good return on the DC investments. And there are various reasons. Regulation is the first reason. And then, you know, getting the right enterprise customers is second, then hyperscalers is the third, the scale is the fourth. So there are many varied reasons, and, you know, that's where, you know, we can basically keenly look at, places like them. So that part, not really. Mm-hmm. But if you look at other parts of digital infrastructure, especially subsea cable, yes, last mile access, giving access to the eyeballs, partnering with hyperscalers in our relevant markets, you know, for infrastructure development. Yes. That is one area which has given us a fairly decent return and good confidence as well in terms of, you know, keeping to invest in there. Having said that, the way we are moving forward, our approach is still to be asset light. So it's not that, you know, we're going with huge investments. Very clear path that if we have to be asset light, we have to be relevant, within our geography, which is, you know, the wider Asia Pac. But we are doing a little bit of, you know, strategic investments outside as well. But most so, it's within the region. And that's where we see a good return coming towards us.
Thank you. Eugene?
I think from a risk and return, it's quite market specific. Second is if you look at global liquidity, financial conditions over the last 9 months. I mean, base interest rates have come up. Uncle Sam, you can loan him and earn money at 4% interest rate. So the financial markets have changed a lot. And I think what that means is going forward, your rate of return, your hurdle rates are definitely higher. I think that also means that the investment criteria will be much more stringent. That would also mean certain projects that were started earlier may not be financially viable anymore as well. So it's going to be a very interesting supply-demand dynamic that will play out over the next few years. So that's one thing that we're concerned about. Between the different infrastructure asset classes, so we can speak more about data centers, but the fundamentals is that these are all about operating leverage. And we have operating leverage, then you want to have that regulatory and investment certainty that your assets will be around for the next decade, 2 decades, 3 decades. Yeah. So in many ways, I agree with Obaid. It's that regulatory part where that's the first hurdle we often need to think through and cross.
Damir, what do you think?
Yeah, I think, for us, when we set up the data center fund at the beginning of the year or the middle of the year, obviously, you know, financial markets were a little bit different than they are now. And the interest rates, as Eugene talked about, obviously have increased significantly. And some of our investors' cost of capital is up at about 12 or 13%. Yeah. So any project that they need to see a return on obviously needs a bit of a threat from that. So you're suddenly talking about mid-teens sort of IRR over a data center project. Mm-hmm. That can be quite hard for some markets.
It is.
Particularly if you're in an exchange rate risk. For example, in Japan, what you betting on the yen? Is it going to be 100 yen to the US dollar, or is it going to be 200 yen to the US dollar in a year's time?
Yeah.
If I knew that, I wouldn't be investing in data centers. I'd be just investing money in the Japanese yen.
Yeah, Japanese yen.
And I think that, that makes a significant difference. And one of the things we decided when we set up the business was we would be open to different business models. And the most common one that we like as a business model, and our investors like and our partners like, is actually to JV in every country we operate in. And so we'll provide the land and the local on ground, and then the operator will come in and run the business. Because it helps share the risk. It helps share the upside as well. Now, we found as we developed the fund, that North Asia is still where there's a ton of appetite for investment, because the risk is considered to be managed. Whilst the economies are growing, the demand is great. Yeah, there's exchange rate challenges, but at least in Japan, there aren't interest rate challenges because the Bank of Japan is pretty much solid on its interest rates. Korea is slightly different. Hong Kong slightly different. China, very different. But North Asia is where we're seeing a lot more stability and comfort. So the risk reward is better. But we still have investors who go, I don't like Korea, or I don't like a specific market. I could go on for hours.
Chris?
Yeah, again, it is really on the individual's kind of profile of what they look at. But what we've seen in the overall, I'll say just to add, is that this year the dynamic, obviously, with the financial markets have changed. And so at the beginning of the year, we came in and transaction levels were still high, continuing in through the Q4 of 21. Since July, those transactions have kind of dried up, right? And that's across most real estate sectors, but data centers hasn't avoided that. And it's slowing, but it's still, there's still transactions happening. The projects are getting kicked off and being announced, and that's goodness, right? It's still strong, but what we are seeing is that a bit more deferment, and IC kind of scrutiny is much higher, and maybe a couple more rounds on pulling the trigger on that. We're not seeing anything different in terms of like ticket sizes. They're still quite large, which hampers some of the investors' kind of risks or their appetite to go into, I'll say, non-traditional data center investors' appetite to go into regions like Southeast Asia, because they feel like they can't get the scale, which is because they got to do each market by market. Versus, say, going to a Japan or a Korea or an India, where that's much more, it's a easier, quote unquote, kind of view into that aspect of it. So,
thank you. The last question is that who do you think will be the market dominance in this race of digital infrastructure investments? So, will the bank will be the one, or is it private equity firms? Or is it individual investors in every countries, or actually the real estate owner who are going to dictate the terms?
I would say actually the biggest investor are the end customers, the hyperscalers, enterprises. I mean, bear in mind that the data center facility is just a fraction of their total IT spec and IT spend. Yeah. So those will be the guys that will really put the money, where their mouth is. The big hyperscalers, they are pursuing a dual strategy of doing it themselves, whether it's build to suit, build own or build, operate, transfer models in some case, and at the same time supplementing it with capacity from colos and third parties as well. So it'll be interesting to see how the market play out. But I think generally depends who has the lowest cost of capital to play this game.
Obed, what do you think?
Totally second, Eugene. It's the hyperscalers who are going to basically determine, how the whole digital infrastructure pans out. That's how we see it, basically. So
not the banks and not any.
Look, again, you have to look at the value chain again. Banks, private equity firms, they're there for a different reason, right? Other than hyperscalers. So they're there for a return of investment. So, the word that he used, the lowest cost of capital, I think the interest is different from a hyperscaler compared to other capital. So from that perspective, I think the major influence is going to come from them.
Okay, Damir?
I'm going to be slightly contrarian just because it's running up to the end of the panel. Look, I think whilst we lose sight of the fact that lots of other operators, lots of other consumer data center space than hyperscalers, and the whole market gets sort of sucked into this idea of the 6 or 8 customers, and we've just got to do that. There's a lot more 6 or 8 customers, and so there's places in the market for everyone to play and win. And I think that as hyperscalers and the larger ones discover that whilst they still have a cheap cost of capital, capital isn't free that your investment dollar is best spent on your servers and the things you do really well, rather than necessarily becoming a real estate operator and owning and developing data centers. And I think, while capital has been cheap and easy, it's been a very easy decision to say, we'll buy land and we'll build our data centers. And I think that will continue in certain markets. But in other markets where maybe it's not as simple today for them to operate, they will still continue to look at outsourced opportunities where someone else builds and develops for them. So I think there's an opportunity. The answer to your question is who's going to win? I think everyone can. I don't think there will be one winner.
Yep. Chris, what do you think?
I think, everybody, knock on wood, right? Everybody does win here. And what we're seeing is much more all new investors entering the market, right? So, the family offices, the pension funds, they're all doing those different entry points that we've talked about already. So, there's lots of ability for them to enter the market and be successful in their investments here. And so I think that's what's encouraging. On the hyperscaler, my only view there, just, knowing how the sausage is made, at least at one of them, my years there, is that, from the inside, the decision is never like, oh, we must build, or we must go colo, or we must, do core and shell. It's, I've got a demand signal from the business. I've got a time pressure from the business, and what are my options to readily execute that plan? And they will use whatever means necessary to get that across the line, because their growth and the pressure to grow their infrastructure is so high that that's what they'll do. That's been their mode from day one, and I think it will continue to the foreseeable. When it's easy money, though, and the cost of capital is small, and they're trying to, kind of plant their flag, sometimes self-build and operate is true, but, they always have partners. So, they're going to continue doing that. So,
thank you, Chris. We are open to any questions from the audience. Oh, very good. No one is asking. So thank you so much. Thank you for these panels. And if there's any more questions, please reach out to each of the panels. We'll be more than happy.
Thank you very much to our panelists and Dedi, our moderator, and thank you for coming along to listen. I hope you had some actionable insights to take away there. We're going to a quick coffee break now, but please come and join us at the top of the hour where we'll begin the next session. Hope to see you there. Take care.